Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys. Well, as you can see, the situation on the gold market has changed drastically in the short-term perspective. So just we have said that market probably will drop lower, since it really was standing at the thin line right at the point where double ripple should fail, or also market has turned down here, broken this consolidation. But situation has changed in a blink of an eye. As soon as the new geopolitical tensions have risen in the Middle East, so you know probably about the conflict between the Saudi Arabia and the Iran. So these geopolitical surprises, it's not something really unexpected in our long-term strategy, because within the 2 months we already tell in our weekly research that we expect the growing geopolitical tensions, and we think that the geopolicy will come on the first place among the driving factors on the gold market. And while the balance will start to shift in the favor of the geopolicy from the dominating of the fundamentals and the economical factors, gold will start to turn the direction. And this period, probably when the weight of the geopolicy will start to grow among the factors that are driving the gold, market will be probably very volatile. We will get a lot of different bounces. The volatility probably will rise significantly, because this is the breaking of some fundamental background of the gold market, which factors will start to dominate and move the market. Usually the fundamental factors that drive the gold is the inflation and some other economical issues. But we think that geopolicy in the nearest time, I mean from the big scale point of view, will start to dominate and will take more and more lead in the impact on the gold market. And although market could shift lower, as we said, the market probably could hit the 1,000 target, but the driving and moving to this target will be very volatile, with a lot of bounces and retracements. And probably we think that gold market stands somewhere near the bottom. And here we have another example how geopolitics will impact the market. So unexpected action that also leads investors become more careful to the geopolitical events, to pay more attention to geopolicy that stands right now in the Middle East, and to give more value in the assessment of the different factors that impacting the gold, and give more value to the geopolicy. And as soon as this surprising impacts could happen oftener and oftener, the investors will start to reassess overall situation on the gold market, and probably under impact of these geopolitical issues, they could really change the opinion in the place of the gold market right now in the global economy, and probably this could lead to even changing of the trend. This could lead to the finishing of the long-term bear trend on the gold market. I think that should happen relatively soon in the big scale. I mean, maybe even in 2016. From the technical point of view, guys, now we have a very interesting situation. Here we stand almost at the eve of the failure of the bullish setup, but right now situation has changed. So you can see, first of all, as market has held above these lows, above the 1060 area, it has kept valid the double ripple buy pattern. This is the first moment. Second moment, from the classical point of view, we have the pennant is forming right now on the gold market, and take a look what we have. First of all, trend has shifted bullish, but the fact that market hasn't touched the lower border before it has moved to the opposite border, this could be quite bullish sign, very bullish. Usually, when the market forms the triangle, and if market will not reach the opposite border and turns up and taking the challenge to break through the triangle, this usually very bullish, and this happens before the breakout will take place. Right now, you could see that market is taking an attempt to pass through this resistance. But this is not just a line, guys. As I told previously, this is the strong consolidation area. That's why this will be not very simple for the market to pass through this range. Okay? So back to the market with the rectangle. Here is. That's why it's really tough problem for gold to pass through the 1085. From the technical point of view on the daily charts, nothing really has changed because we have two major areas. 1085, 1060. So breaking through the 1085 will probably could lead to the further upward action. Based on the double repo, market could reach as far as 1120 area. If market will fail here, return it back down, then breakout down could follow. So currently we have a bit contradictional situation because from the geopolitical point of view, gold is bullish and new tensions have appeared. It's a really big question what the result of these tensions will be. But reaction on such sort of tensions is very unstable and very flexible, because market very soon forgets what has happened just a few days ago. That's why currently reaction looks really strong, but how stable this reaction will be, it's really a big question. That's why the economical fundamental background for the gold market is not really bullish. That's why before taking any long position, if you do not have anyone, of course, because if you hold the position based on the double repo, then it probably feels well. So it's really, you already have the good position. But for those who are thinking about maybe to take long or maybe to wait something, my thought is that we probably should wait for the clear breakout to the upside. Because by the reasons that we have just discussed, until market doesn't break this area to the upside, it's really big risk for taking long position right at the resistance. This will be most wrong place for taking long right now. It's better to wait the breakout will happen and take the position on the retesting of this trend line, or at least at some bounce down. That will be safer way to take the long position. Currently, we of course will not think about the taking short, because the setup that we have discussed yesterday's market stands above the 1060 and hasn't shown close below the 1060. Then currently our setup for taking the short will be postponed and is not valid right now. Because if market will turn back down, this will be quite another tune, but right now it should be abandoned for some time. On the intraday charts, guys, on the 4-hour time frame chart, we have ABCD pattern to the upside. Market right now stands at the resistance, not just of the natural support resistance area at 1085, but this is also, take a look, monthly pivot resistance 1, and that is ABCD minor target. The next target stands right here, 1083. It's very close, even 1082 probably. This will be the target of the ABCD. How market could develop this situation? So we will take a look at the hourly chart, guys. It's just perfect Russian rinse. So we have discussed. Looks really promising. So market here, for example, could form the butterfly. If we suggest that market will form the butterfly, its 1618 target will be right at the same area as it stands on the 4-hour time frame chart ABCD target. So for example, let's draw it. In this manner. For example, suggest that some retracement will happen, this market could start move to the upside. In this case, 1618 extension in butterfly has the same target as this EBCD pattern. This could happen. If market is really bullish, it should not show very deep retracement because this is minor target. This is just 618 extension. So retracement already has been done by these actions. You can see move down already has happened. Too deep retracement will be negative sign for the bullish perspective of the market. Besides, market right now stands at a very important area. If market will show too deep retracement down, this will be not good moment for the market. That's why this setup is for those who still would like to take the risk and would like to take the long. If you will take the long by this butterfly, you probably should place stop somewhere below these lows. It's not necessary to place fire stop, because the market will survive and will start move up. It will not break these lows. If it will break these lows, it will mean that hardly upward continuation will happen right now. So, but again, our conservative approach and major our idea is that it's better to wait for a real breakout will happen. That will be just safer for taking the long position.